very good afternoon. Asian markets were subdued today, cooling from strong gains in the prior session as investors turn cautious over Russia-Ukraine peace talks and upcoming signals from the Federal Reserve at the upcoming Jackson Hole Symposium. The Nikkei share average declined by 0.38%. The Hang Seng Index fell by 0.21%, while the Shanghai Composite Index ended flattish, down 0.02%. US markets ended the session flat yesterday. Investors are busy digesting, of course, a lot of earnings reports that are set to come out this week. And of course, they're waiting to hear in terms of Fed sentiment from the Jackson Hole Symposium that's taking place sometime this week. And of course, the FOMC, that is the Fed minutes from the last meeting on interest rates, to get a signal on where the Fed is in terms of its monetary policy stance. The Dow Jones Industrial Average fell marginally by 0.08%. The S&P 500 ended flat, down 0.01%, while the Nasdaq Composite Index edged up 0.03%. Looking at local indicators, we see that the All-Share Index is up 0.5% at 101,656 index points. Looking at currencies, we see that the rand is trading at 17.58 against the US dollar, 20.55 vis-a-vis the euro, and 23.77 against the British pound. On the commodity front, we see that gold is trading at $3,343 an ounce, platinum at $1,342 an ounce, while Brent crude oil is trading a bit lower, just under $66 a barrel. All right, let's get into it now with Michael Traherne. He's a portfolio manager at Vestact. Thank you so much, Michael, for joining us. It's been an awful long time, but it's great to see you nonetheless. So what's your characterization of markets at the moment? Is it a case of let's wait on the sidelines ahead of the Fed Jackson Hole meetings that are set to take place this week? And what quarters would be keeping a strong eye on the Russia-Ukraine peace talks?
Yeah, afternoon, Numpu. Good to chat to you again. There has been a drop in trading volumes, particularly internationally, as markets wait to see what comes out of Jackson Hole. The big speech by Jerome Powell, that's on Friday. Probably quite a lot of people looking at that, particularly given how much pressure the Fed has been under from the White House around their policy. So markets will be waiting to see if there's any policy shift, particularly to dropping interest rates more aggressively than expected. In terms of the Ukraine-Russian war, apart from oil traders and grain traders, global markets have mostly moved on from that. Global supply chains have moved around Russia. There was supply chain shocks 3 years ago when the war started. But those have mostly been sorted out by global supply chains.
Yes.
As far as markets go, it doesn't really matter anymore.
So yesterday, we got the MTN half-year results. We spoke to the actual executives there at MTN, but we couldn't analyze the information. And unfortunately for them, there was that news that came out as well. On top of that, that an investigation by the United States was continuing in terms of allegations around MTN's conduct in Afghanistan and Iran. But of course, they reported headline earnings per share up over 350%, and noted that currency problems in Nigeria had played a big role. That is, the lack of them, compared to the previous year, had played a role in improving their bottom line. I just wanted your analysis on how you thought MTN is faring, and that cloud in the background, how it might affect them, and whether you'd hold that stock.
Yeah, so I think to put things into perspective, MTN share price has doubled over the last year, so they're definitely doing well. A big part of that is the stabilizing of the Nigerian naira. Nigeria is the second biggest operating market, and when the naira was weakening significantly, any profits that they were making, when you translate that back into rands, they were effectively going backwards. So as of this year, the naira has stabilized nicely. It's actually even strengthened. And that all helps MTN. Strong revenue growth. The company overall saw revenue grow 22%. That's what you like to see. They've also increased their forecasts going forward. Another thing that you like to see. A slight blemish on their results is that South Africa is basically treading water. It's no surprise to anyone in South Africa, but it's a very tough economic environment and competitive environment. It's a tough one there. And then the DOJ thing, that's a bit of a wild card. And given how powerful the DOJ is globally, if that finding goes against them, that could severely negatively impact MTN's ability to use things like the SWIFT payment network and get money in and out of countries. So, hopefully that gets resolved without too much pain.
Yeah, no, that would be negative indeed. Another negative thing that we're looking at that's getting a lot of attention is the Rand manipulation case that's finally happening at the Constitutional Court today. It's a matter that was brought by the Competition Commission. What's your understanding of the issues at stake, and what would be the implications for the banks implicated if the Apex Court were to find that there had been some jiggery-pokery going on?
Yeah, I think the fact that we're getting close to finality on that case is a good thing. I think it's very important to call it what it is, though. I don't think Rand manipulation is the name that it should be. It was price fixing. That's what it was. When you say Rand manipulation to the man on the street, it sounds like someone was manipulating the Rand by very large values, and that's not the case. The Rand itself wasn't manipulated. What was manipulated, and I should change the wording, there was price fixing between the banks about the cost that they were charging large clients to change currency for them. Whenever you bring currency in and out of the country, you have to go through one of the banks, and the banks charge you a fee for doing that currency conversion. And traders, the banks will claim more rogue traders. We're using chat rooms to divvy up clients so that they could charge higher rates, higher fees for doing those exchanges. So it wasn't a case of manipulation of the currency. The currency is far too big to be manipulated. This was a case of price fixing. So I'll be glad when this is done, and I think we should call it what it is.
Interesting. We don't have enough time to do a back and forth on it, but it would be a conversation that I'd love to have with you offline. And then, of course, our local market has had an incredibly good run this year. And I understand that that's really been influenced primarily by a few stocks, 10 stocks. But what's your view on how much more the local bourse has to go in terms of even breaching 105,000 points?
I think by global standards, our companies are very cheap. That means that if you're a betting man, they're more likely to be going up than down because they're coming off of a low base. Things like rebasing our inflation target at 3% is very good for us on an international stage. So I hope that sticks. We're seeing more foreign investors come in to take advantage of our cheaper prices. And then, as you say, there's a handful of very large multinational companies that have had a very good year so far, and that's been driving things higher. I don't think we can complain about that. It's good for our pension funds and our savings. And those particular companies like Naspers and Prosus and Richemont, I think those companies still have more in the tank. So I would be bullish about the next 6 months for the market.
All right. Thank you so much, Michael, for your time and insights. That was Michael Chahern. He's a portfolio manager at Vestact.